The banking system in any given society is the backbone through which the economic lifeblood of the nation runs. The economic well-being of the state will be, to a very large extent, dependent on the strength, sophistication, and complexity of its banking industry. Nigeria boasts of one of the strongest banking systems in Africa, and this fact has been all too evident in the fact that many banking institutions indigenous to Nigeria have established offshore operations in many other African economies. The banking industry in Nigeria has come a long way, beginning with the era of British colonial administration, when the idea of banking system was introduced into the country. The very first banking institution in Nigeria was the African Banking Corporation, which was floated in 1892 by a group of British traders. Since then, the Nigerian financial system has passed through many stages of development that have fundamentally affected the lives of the citizens, the business environment, and the nation's economy. In recent times, the regulatory authorities on the banking in Nigeria, the Central Bank of Nigeria, introduced reforms that have fundamentally altered the outlook, operations, and nature of banking system in the country. Well, let's put this together. I have with me the former president of the Chartered Institute of Bankers of Nigeria. He's a professor of economics, Professor Segun Ajibola. He joins me now in the studio to look at all of this and how it affects the Nigerian economy in total. Thank you very much, Prof, for joining us today.
Thank you very much.
Prof, I want to start with the banking sector. A lot of evolution, a lot of things have happened from the colonial era till now. I know you have an experience of all of this. Tell us how it's been and where we find ourselves. Are we really doing well? I think with records coming in, there's a level of stability in our banking system.
Yeah, we've gone a very long way looking at what has transpired in the last 59 years. And of course, 125 years of banking in Nigeria. Especially what we have witnessed in the industry in the last 10, 12 years. A lot of reforms, significant improvement in the code of conduct, corporate governance practices, and of course, efforts of the industry at deepening banking services and cultivating banking habits in Nigeria. We are far ahead of many jurisdictions in terms of the quality and complexity and, of course, the scope of our payment system. Nigerian banks are also moving away from the in-domino-do approach, the cash and carry kind of business, what some would refer to as the kill-and-go structure of our banking system, to now cultivating relationships with some virgin areas of the economy, especially the small to medium enterprises, the SME, looking at how that banking culture can get across to the remotest part of the country, cooperating with the telcos and so on, looking at what we can do to move away from a cash economy to a cashless economy, and also the introduction of the BVN, which is that verification number has helped to stem some unwholesome practices, and even carrying the message of banking to corporate and personal institutions. So we've gone a long way. But this is not to say that everything has been well. We've had a lot of challenges in the way and manner banking practices has been done. Have been deployed in the environment. We've had challenges in terms of quality of personnel. We've had challenges in terms of policy somersaults. we've had a lot of challenges, even coming from the regulatory aspect of our banking system to the operating aspect. You occasionally see some disconnect over the past 59 years in particular. And we've had some over-concentration in deployment of risk assets, that is loans and advances, to areas outside the real sectors of the economy, thereby impeding the development of our agricultural sector, the industrial sector, at the, in favor of the cash and carry, the commerce sector, thereby drawing us far back from being an industrial-like economy that we've tried to be. We've also had, until very recently, neglect of certain sectors that keep helping some other jurisdictions that were in the same level of development with us 59 years back. We talk of the services sector that have been industries under that sector, services, specific services under that particular sector. They've helped so many economies of Malaysia, of Indonesia, of Singapore, of South Korea, and so on and so forth. It's now that Nigeria banks are looking into ways of helping this sector. We are talking of the creative sector now.
Yeah.
We are talking of tourism, we are talking of hospitality, and some allied services sector. So these are areas that we have not given due attention to in the past. But the game is changing gradually.
Because we see this aggressive drive, even by the Central Bank of Nigeria, to improve lending to all of the sectors you mentioned, and just to grow the real sector. In your assessment, how well would you say banks are keen into this drive by the Apex Bank? Because some are saying that they move kind of too, I don't know the word to use, kind of too harsh by the central bank. There should be a gradual process. From 60% loan ratio, now we're talking about 65%. A lot of moves are being made by the Apex Bank.
Yes, like I said, the only way an economy can achieve sustainability in growth and even development is for banks to move away from the kind of cash and carry business to helping the real sector of the economy. And this can only happen if operators in those sectors have access to quality, affordable loans to run their businesses. So Central Bank is passionate about what we can do as a country to help these sectors. And there's no way we can help the sector if those sectors that can galvanize the economy to the next level, if they are starved of funds. However, we need to tread with caution. When banks, as a practitioner, when banks are compelled to lend, experience has shown over the past 59 years that most banks end up with bad loans because of that desperation to meet certain specified ratios. So while it is good to impose loan-to-deposit ratio, it is also good to advise the banks not to be over-aggressive in lending. Therefore, if we are talking of 60% loan-to-deposit ratio, 65% loan-to-deposit ratio, where are the takers? Where are those quality names? Where are those quality borrowers outside there? Because it's anybody, any Dick and Harry in a bank can lend. But the business of quality lending is not for the boys. The boys can lend anyhow, but it is the men in the industry that can lend and ensure. A good loan is that loan that goes out and comes back unaided.
Exactly.
So if the loan to deposit ratio maybe the bank was 40% before, was 50, or often much lower.
Lower.
If it goes suddenly to 65, and penalties are now coming for non-compliance, then will there not be desperation to deploy risk assets to those that ordinarily are not qualified, just to avoid that penalty? So that is where the issue you raise, whether it should be gradual process,
Exactly.
gradual review upward, should be the case. Because the economy, whether we like it or not, the economy is still undergoing some stress. So if we pump money to who? And to lend is even one, there are complements that will make a borrower to perform.
Yeah. Yeah.
The quantum, the level, the quantity and quality of infrastructure available. Is the market sufficiently friendly? Is the market not hostile even to the products that we come out with in Nigeria? If we encourage our operators in the risk sector of the economy, as of today, there are so many, even though we are talking of the agreement, the African free trade agreement now, but it's just at infancy. So what I'm saying in essence is, even when we encourage our operators in the industry to produce, is the market sufficient to absorb? And when we look at what has transpired in the last 59 years, we know that we've had a lot of gaps in our industrial policy. In 1960, our population was just a little over 50 million. Today we are talking of 200 million. 200 million mouths to be fed. So if we are talking about lending, we must emphasize agriculture. If we lend to agriculture, those who are operating in that sector, including myself, do they have other complements, the infrastructure to promote agribusiness in Nigeria? Agri-value chain. Are we provided the enabling environment for all the operators within the value chain to survive? So it's not a question of Naira and Kobo alone. Other stakeholders must be prepared to play their own role. Those who are in charge of policies, those who are in charge of provision of infrastructural facilities, and other things we need to enable the environment must be prepared to play their own role. Then the bank can confidently, comfortably deploy loans and advances. If the banks lend and other things are not in place, it will be money going down the drain. I have been a practitioner and I know what has transpired. So that is the challenge we do have as far as that is concerned.
All right, well, just rounding this up because time is already fast spent. Prof, what are your expectations as we move on? A lot of projections. The figures are not looking very good. Government is trying. We have a new economic team. A lot of expectations from this government, even as we move on, even with these challenges.
Yeah, I think the future is very bright. I must commend this administration for the efforts they've put in place, even in terms of, we are talking about policies, even in terms of the policy initiatives that we have seen. We have seen a lot of hopes coming. If we talk about agriculture, for example, at least we can see lake rice. That's output of good initiative.
Yes.
And we are seeing a lot of intervention funds going into different sectors of the economy to galvanize performances in those economies, even though I still have on the issue of who bears the risk. If it's intervention fund and anything goes wrong, my bank still bears the full weight of the loss. It's still an issue. Then we are seeing efforts being deployed towards provision of infrastructural facilities. So the consciousness, the awareness, the commitment on the part of the government of the day, these are things that we can commend. We just hope that we will do more of walking than talking. In the last 59 years, we've talked too much in this country.
Wow.
We've put too many things on paper. So it's more of loss of motion without movement. But this government is trying to reverse that, move with the motion. So if we can continue, if we can sustain this level of commitment, the willpower to do the right thing, to put the right thing in perspectives, and for all of us to know that Nigeria is our project, then I can say that by the time we are celebrating, do I say 70th anniversary and so on and so forth, we'll be talking about a Nigerian state, Nigeria economy that is significantly different from what we have today.
Prof. Ajibola, I must thank you very much for your time. We can't have enough of you, but I know we are going to continue this topic and break it down more when we'll have you in studio again. Thank you very much for your time, Professor Segun Ajibola, immediate past president, CIB.